We have with us today the Managing Director of Barclays Bank Mauritius, Ravin Dajee. He will be sharing his insight on the bank's operations. Thank you, Ravin, for welcoming Investors Mag. Barclays Bank Mauritius is one of the leading banking institutions in Mauritius. As you progress on your rebranding journey towards becoming Absa, how do you intend to maintain this position?
Thank you, Kevin, for having me. I think before that, let me remind your readers and viewers that this year we're celebrating the 100 years anniversary of Barclays Bank Mauritius presence on the island. I think it's a major milestone. At the same time, we are rebranding Absa. So it's a bit more emotional to lose the Barclays brand while we're celebrating the 100 years anniversary and to embrace this new brand. I can tell you it's going very well. The Barclays Bank PLC has decided to leave the continent, and for multiple reasons, which we're not going to go on this today. So that's a fact. We can't change that. So for us then is, how do we make a success of the new entity we're going to operate under and the new framework? Maybe remind you of the progress we've made over the last 5 years. Our return on equity has gone from roughly 10% to around 19% over 5 years. Our profit after tax has increased by a CAGR of 25%. Our revenue has increased by a CAGR around 11%. So I think by all metrics, we've done reasonably well. And it's important for us to continue this momentum. And we believe that with the new brand, I think clearly it's a new framework we're going to work under. But I think what I'm excited about is, given we're going to be a regional bank, we would be a bit more relevant to the community in which we operate, be it in Mauritius or in Africa. So I guess our risk appetite on the continent will be more relevant, bigger, if I may say, but we're also better placed to understand the community and communities under which we operate and address what is required for this economy and the economy in Africa.
But what does it bring to operate under the Absa brand?
So let me again remind you of Absa's brand. You know, in South Africa, even though it was a subsidiary of Barclays Bank PLC, we've been operating for ages, for years, under the brand of Absa. So in South Africa, it's a household name. It's a brand that people know very well. So after the decoupling with Barclays, we had to make a choice whether we operate under a completely new brand or use the brand of Absa, which is well known in South Africa. And just to remind you, in the Absa group, you've got South Africa and you've got 9 other countries. What does that group mean? You know, we employ more than 40,000 people in the group. We've got more than 12 million clients within that group. We operate in 12 jurisdictions. And we believe we've got the right footprint in Africa. So as much as you have to operate in your local economy in Mauritius, but I'm sure a number of our clients are also looking at operating in Africa. And we believe that's a big competitive advantage for us to have to accompany our client in Africa.
But when should we expect Barclays Bank Mauritius to change its name?
So the sale of shares from Barclays UK happened in June 2017. And from that date, we had 3 years to change the brand. But you know, rebranding is not just change the name. There's a lot of stuff to do, including our IT platform, culture, risk appetite, and so on. So we've been quite far in that journey. The final piece would be, of course, to change the name. So we've got up till June next year to do that.
With low interest rates and volatile markets, where do you see growth coming from?
So I don't think interest rate is the only challenge the industry faces. Actually, if you're managing your balance sheet properly, changes in interest rates shouldn't affect your numbers, your P&L, because you would position your balance sheet in a way that if interest rate goes up or down, it doesn't impact your profitability. But your question is about around growth. I believe that in a low interest rate environment, companies invest more, which should eventually help bank to do more. So again, I'm not sure that's the major issue we've got for banks growth. If anything, in my belief, low interest rates should get more investment happening, should get banks to do better. I think there are other challenges that we can take later and discuss about it. But just to name a few, I believe that the change in the DTA in India is a major one that we would have to look at in terms of diversification. Whether the flows in Africa would cover what we're going to lose in India. We need to address that. You've got competition from non-bank financial services. You've got digitalization and fintech. You've got regulatory pressure on all sides. So there is a number of other challenges that we look at. I think the reduced or subdued growth globally would have its impact on the Mauritian economy, maybe on a second run, but it will have an impact. If you look at the banking industry today, more than 50% of the profit is generated outside Mauritius. So we are very much dependent on the global economy and what happened around us. So, there's a lot of moving parts that we need to make sure we assess properly.
Banking these days is increasingly done digitally. What are the latest developments at Barclays Bank Mauritius?
Yeah. So we want to be part of that journey. It's important. I think if you miss that, I think you are under threat to lose your competitive advantage and to lose your business model. So, unlike any other bank, we have embraced the whole digitalization initiative that we're saying, and we're doing it three main reasons. One is to improve our cost to serve. We believe that we should embrace technology to reduce the cost of serving clients, but also to improve the speed. The second piece is, of course, the client touch point. A lot of clients today don't have time. They want to be served in a completely different way. And that we should be able to get that through digitalization. But again, to answer your question, we are on the forefront of it. The group is on the forefront of it. And the way we're operating now is there's a lot of thinking and strategy and investment happen from a group perspective. But as a country, we're also allowed to look at what in Mauritius do we require to improve our response on that. So, be it the client touch point, apps, mobile banking, internet banking, but other products that we can serve through the online channel. A lot of them happening now. There's also a debate globally whether we should still have as many branches as we have in the UK and in Europe generally, but also in the US. We've seen a drop, but we still believe that branches will still have its relevance and importance. So what is the right mix between serving client digitally, but also have a branch outlet, maybe in a different form, in a different approach? So we'll have to find that right balance. But I can, reassure you that it is on the top of our agenda.
And what are the other challenges the Mauritian banking sector is facing today?
On the domestic market, it's a small market. And even though we've got, I think, around 12 to 13 banks operating on the local market, the market is dominated by two banks. They have more than 70% of the market share. Now, is that a good thing for the economy? I don't know. I might say that because I'm not one of the two we're talking about. But from a financial stability perspective, you would want to be a bit more diversified. So I believe there should be consolidation on the domestic market.
Do you mean that there's no room for new banks in Mauritius?
No, there are. I think there are room, especially on segment B, the global business. And I believe that we should be able to attract a number of big names. I think it's important for the image of the country. I think it's also important to reassure different authorities across the world, but also the global clients that, we've got big names. So I think it's important to get that. We need to attract the big names, but also I think there are niche players that we can bring, that we should bring, to look at a number of niche segment, but products that we should be doing from Mauritius.
What does the term financial inclusion mean to you? And what is Barclays Bank Mauritius doing to promote financial inclusion in Mauritius?
Yeah. So as a group, we firmly believe it, and as a group we operate in Africa, we firmly believe. And we have to differentiate between financial inclusion as is in terms of access to banking. I don't think we've got such a problem in Mauritius. The level of bankability is very high. I think latest report talks about 98%. So I don't think opening an account in Mauritius is an issue for anybody. You could argue that access to finance is still an issue. And that's where we need to be make a bit more effort. But we have also to balance it, is in the sense that banks do not lend their own money. Banks lend other people's money. And we've got a duty to be responsible. We've got a duty to work as trustees for depositors. So how do you find the right balance between being responsible, at the same time trying to help as many SMEs as we can? And these are maybe some of the people that have an issue with access to finance. And we also understand that SMEs would be the one that would drive the economy, would be the one that would create employment, and would be the one that would democratize the economy as well. So, as I said to you, we need to find the right balance between being the trustee of depositors and how do we ensure that we are also helping that segment of the economy, which is important. So, to answer your question, for us, I don't think that opening account is an issue. I believe that that access to finance is something that we should be able to think together with the authorities, with the players, and the industry to find ways and means of making it a bit more easy to access finance.
One last question. What is your outlook for the local banking industry and the Mauritian economy for 2020?
Yeah, so as I mentioned before, I think for the banking industry, as growth has been coming over the last 5-6 years from the international business, from the global business, and with the change in DTA in India, we will be under stress. Now, we are all trying to ensure that we look at Africa and try to see how do we reposition ourselves to serve that continent, because a lot of flows are coming into Africa, and how do we capture those flows through Mauritius? Would we be able to capture as much flow to cover what we're losing to India? Need to be looked at, but also how do we make ourselves accepted in a way, and also have the right product and solution for investment in Africa, because we can't replicate exactly what we did in India into Africa. It's a two different market, two different requirement, and to be fair to all the players in the sector, we're all doing effort. We're doing at marketing, we look at product, we're looking at how do we service them better. So I think segment B will be an issue. Segment on the domestic market, I believe, and also to an extent on the offshore market, I think talent is an issue that we need to address. So we need to graduate in terms of the offering. We doing only back office work and stuff like that will not take us to the next level. So, and that graduation to a different approach requires people, requires skill. And so talent and the fight for talent will be one. And we will have to make ourselves more attractive as a country to get professionals come here. But also, how do we get diaspora, Mauritian diaspora, who are, I'm sure, across the world in this industry, how do we get them back? So talent is an issue. And if you look at the different segment, I mentioned competition from non-bank financial services. And sometimes we believe there's no level playing field. So if you look at those who are doing mobile money and the rest of it, the question you ask, do they have the same rigor from a compliance, from a money laundering, do they have the same rigor as bank? Because the cost of compliance for bank have got very, very high now. So if other players can operate in the same segment, in the same product, without the constraint that you have when you have hold a banking license, then it's a challenge to look at whether there is level playing field. So very often, many players, many people say the banking industry is extremely profitable. True, when you look at the numbers, the absolute numbers, and you have to make two distinctions. First distinction is you have to separate onshore business, domestic business, and offshore business. If you look at the onshore business, I'm not sure we are as much profitable. But secondly, you can't look at profitability in isolation. You have to look at it compared to the equity and the investment you make. So the average return on equity of banks in Mauritius is around 10 to 11%. And that's not necessarily very, very profitable. You've got many other sectors that do much better than us. Of course, within that average of 10, 11, you've got some banks who do extremely well. But 18% is the maximum I think the leading bank is doing today. The rest are not doing that great. So we need to kind of make sure that we understand that those differences onshore and offshore, but also profit in relation to investment we've made. So that from the banking sector, I think the economy, we should also accept that an average of 3% over the last 5-6 years is not as bad when you compare to what the global economy is doing, but also to our peers. But we used to more than that, and we used to make sure that we are progressing year on year. And for us to reach the next level, we'll have to find new segment areas to develop. So I think the global economy, if there's a drop there, that will impact the economy. So the growth in the economy is important. The quality of that growth is also important. Now, if it's a lot about infrastructure or public spending, public investment, I'm not sure how the other economy grows as a result. I also believe that youth unemployment is something that we need to watch carefully, and all sectors we need to look at how do we do better and how do we ensure that because if people at that level who've left university and looking and struggling to get employment, you don't want to have a social problem there. I think third is management of our debt, and there as well, I believe we'll have to have some discipline. We shouldn't come to a stage where we are spending more than we can generate revenue to manage that debt. So I think management of that debt is critical. We need to ensure that we do that. But we should carry on investment. We should carry on investing. Prioritizing those investments is important. Ensuring that our foreign debt portion compared to the total debt should be kept a check. We should make sure that we are not taking a lot of hard currency debt. So that's an important part. I think inflation is kind of okay now, but clearly if commodity prices pick up, then that would have an impact, and we need to manage that properly. And your first question was in low interest rate. At an inflation of 0.9% now, I think we can live with low interest rate. But if that inflation picks up, interest rate will have to go up, and then you would question what impact it will have on investment, on the economy. So I think I'm optimistic on the economy, but we have to make sure that we start looking at where the drivers of future growth will come from and trying to invest now, including in capital, human capital, and finding the right areas to invest.